Ladies and gentlemen, good day and welcome to the Goldiam International Q1 FY25 earnings conference call, hosted by Monarch Networth Capital. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Dani from Monarch Networth Capital. Thank you, and over to you, sir.
Yeah, thank you, Sejal. Good afternoon, everyone. On behalf of Monarch Networth Capital, we're delighted to host the senior management of Goldiam International. We have with us Mr. Rashesh Bansali, Executive Chairman, and Anmol Bansali, Managing Director of the company. We will start the call with opening remarks from Rashesh, sir, and then move to Q&A. Thank you, and over to you, sir.
Thank you, Rahul. Hello, everyone. Warm welcome to our call and welcome to the Q1 FY25 earnings call for Goldiam International Limited. We are pleased to report that we have continued the momentum from last year's strong finish, achieving a 40% growth in top-line revenue year-over-year and a solid 12% growth quarter-over-quarter. This accomplishment is a testament to the hard work and strategic initiatives our team has undertaken to drive both growth and profitability. For this quarter, our total income increased by 40% YOY to rupees 1,697 million. Our EBITDA margin stood at 20.1%, with EBITDA for the quarter growing by 43% YOY to rupees 342 million. Net profit for the quarter was rupees 220 million, reflecting a growth of 27.4% YOY. Over the years, our focus has been on expanding our lab-grown diamond segment. I'm pleased to share that this segment now contributes to 68% of our revenue, a significant increase from 33% in Q1 FY24 and 54% in Q4 FY24. Goldiam's strong performance this quarter underscores our ability to deepen our wallet share among our large US retail customers. The consistent quarter-on-quarter growth in lab-grown diamond jewelry sales highlights the ongoing shift in consumer preferences in the United States of America. Our innovative designs, timely deliveries, superior customer service are solidifying Goldiam's position as a preferred supplier of diamond jewelry. While there has been significant discussion about the declining prices of lab-grown diamonds, we believe the market has now largely stabilized. The oversupply issue is correcting itself, as seen by the shutdown of several production operations. Although there are numerous articles circulating in the media about falling lab-grown diamond prices, many of these reports are outdated. The current market prices, in fact, remain stable. FY25 is poised to be an exciting year for Goldiam as we prepare to launch our India B2C operations with our new brand, Origem Lab Diamonds. We plan to open 3 to 5 stores in Q3 FY25 with a blueprint in place for rapid scaling post that. Our goal is to become the largest organized retailer of lab-grown diamonds in India. The ambitious venture has been spearheaded by our MD, Anmol Bansali, who, along with Abhinav Kumar, a professional with a strong pedigree and a stellar team from other marquee organizations, has worked tirelessly to bring this vision to life. In the US, consumers at our target price points are clearly favoring lab-grown diamond jewelry, which offers a distinct price advantage. We believe Indian consumers will follow a similar trend. With our India retail venture Origem, we believe to bridge the gap by making lab-grown diamond jewelry more accessible and acceptable across the country. Regarding our order book, Goldiam has secured orders worth 1,400 million rupees for the export of gold-studded diamond jewelry, with the majority being lab-grown diamond jewelry. Notably, we have received a single purchase order worth 50 crore rupees from a large US retailer. These orders are slated for fulfillment by October 24. As of June 30th, 2024, our order book stands at approximately rupees 1,800 million. In conclusion, FY25 promises to be a landmark year for Goldiam as we launch our India operations and continue to see robust growth in our export business. We are confident that we will close this year with record-breaking numbers. Thank you. We are happy to answer all your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dixit Joshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Thanks for the opportunity. Firstly, one clarification. So in the result press release, we have mentioned that 30th June order book is around 150 crore. And you just mentioned 180 crore. And regarding that, how much was that actually, 150 or 180?
So, as on today, the order book is 180. As on 30th June, it was 150.
Okay. Now, as of today, when you say 180, as of June end, it was 150. Then we have given one notice of 60 crore in July and 50 crore in August.
Correct.
Order. Yeah. So that comes to, let's say, 150 plus 110 becomes 260. And you are saying that you must have executed some of the orders in July, August till now. So
Absolutely.
That's why as of today it is 180.
Correct.
Okay. Okay, understood.
Thank you, Bishop.
Thank you.
Thank you. The next question is from the line of Amarnath Bhagat from Ministry of Finance of Oman. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir. Can you come near to the mic and speak, please?
Yeah, just a minute, please. Now is it better?
Yes, sir. Yes, sir, it's better. Please go ahead. Mr. Amarnath?
Is it better now?
Yes, sir.
Okay. So I have 2-3 questions. First of all, with respect to this retail launch, and since it is a one of its kind launch, first time in India, where exactly you guys are trying to launch? In which city or which area, first of all?
Sure. I can take that, Mr. Amarnath. Thanks for the question. We are planning to launch in Mumbai, Bangalore, and NCR region, which is Delhi, Noida, Gurgaon. In Q3 FY25, it will most likely start with Mumbai, and very quickly we should, within 6 to 8 months, have stores opened in all these 3 regions.
And this will be all your COCO model, means company-owned, company-operated, or it will be franchisee model?
That's correct. No, it will be completely COCO model for this first phase of store launches.
Okay. And since it is a new launch, and as you always say, this lab-grown diamond having a more market in international rather than in India, because till now Indian market has not accepted fully that lab-grown market. So is there any plan to open that kind of an showroom outside India as well, especially in your specialized market in US or somewhere?
No, so there is no plan to open stores and go directly to retail anywhere outside of India. We believe India offers the best opportunity from a long-term perspective, given the trends of the country, the growing incomes within the country. And the reason personally that I believe, or we as management at Goldiam believe, that lab-grown has not really taken off in some sense in India is because there is no really large national organized retailer who has placed lab-grown diamond jewelry within their own shelves. So that's a primary difference between America and India, where when lab-grown started in the US, all our retailers, which are large national organized retailers, embraced this new material and, were happy to place it in their shelves. That really boosted the demand. Here we don't see our largest retail channels, retail jewelers doing the same. So We believe that in fact gives us the opportunity to go and test the market as a retailer ourselves within the lab-grown diamond jewelry space.
Okay, sir. Thanks. I just little more detail to understand this retail first time Goldiam is coming. So are we planning to do the lab-grown diamond-based jewelry, or what will be or it will be look like other jewelry companies, but instead of gold and real diamond, you may have certain other combination. And how this retail would look like actually from your side?
Sure. So I'll give a quick brief that I hope covers and answers this question as well as some others. Origem, our retail brand, the brand strategy is to introduce lab-grown diamond jewelry to the Indian public. It is going to be centered as modern-day fine jewelry. So everything will be studded in fine metal, which is effectively 18 karat or 14 karat gold. We will be predominantly selling lab-grown diamond studded jewelry. So almost 100% of our inventory will be studded jewelry, grown diamond studded jewelry. And the price point, store look and feel, the store sizes and location will be very similar and benchmarked to India's few largest omni-channel modern day jewelers. So in terms of even design language, we are not targeting wedding day and that bridal jewelry customer, but the more modern day customer who is shopping for occasion and shopping for your AM to PM diamond jewelry pieces. This will be backed, of course, by a robust website and omni-channel capability.
So this will be launched as on a physical model on your stores as well as it will be launched on the e-commerce side as well.
That's correct.
And both the launch will be simultaneously happening, right?
Yes, more or less within a period of within the same month.
Okay. Just to take it a little forward now, at the moment you're thinking for 3 or 4 stores for the current year 25-26. If you can really highlight your long-term plan relating to this retailing part of it, the value unlocking for Goldiam lies there actually, rather than the B2B. You have seen how the Indian market is flourishing with respect to the quality jewelry retailers. So I'm just trying to understand how far or how long you are thinking in terms of the long-term side of this particular business.
Sure. So it's a great question. I'll just correct some factual statements that were made there. We are planning 3 to 5 stores in Q3 FY25 itself, not the full financial year, but just in the Q3 quarter. Overall, we have currently decided we are going to open in the range of 15 to 18 or 15 to 20 stores within these 3 metro plus regions. Beyond that, we will, evaluate how our merchandise performs and calibrate changes needed on things like price point, category mix. How deep do we want to be in certain categories? Do we see a surprise category winning in lab grown that is not, the same in natural jewelry? So we'll understand trends for some time, for a short period of time, and then take those learnings and create a blueprint that allows us to, of course, expand faster as long as the financials also make sense to us as management and the board of directors of the company. The vision is intact to, definitely scale far and fast. However, there are no numbers as such that we would like to put on the table right now. We do see our competitors in this omni-channel modern day jewelry retail space have in the range of cross 200 to 300 stores. And I think down the road, if you had to ask me personally in 4 or 5 years, is that something that a lab-grown retailer should achieve? I believe that answer is yes. And we hope at Goldiam we can execute in order to create something like that in the future. However, at the moment, I shared what we are internally already have put into the work.
Okay. So my second question was not recently, even just 2 days back, there's an announcement came from ministry relating to this expiration of the diamond import license for gems and jewelry sector, which exporter can import diamond up to 5% of their average turnover from the past 3 years, with a requirement to add around 10% of the value. This one of this new circular, how it is going to help you?
I'm not certain about that, so I'll, maybe our chairman, Mr. Rashesh Bhansali, has some words or is aware of this. I'll ask him if he has any comments to add. If not, we will be happy to get back to you in a week or so.
So let me explain to you. I still have to read the fine prints of that thing, but nevertheless, it will be increasing our supply base. So we will get more, suppliers whom we can buy from. Right now, we are currently sourcing from our own homegrown growing plant as well as other growers. Right now, if we can import lab-grown diamonds and buy from all over the world, I think the competitive advantage of Goldiam, even in wholesale business and retail business, will increase dramatically because our cost of raw material supply will intend to be further down and probably create a couple of points more profit for the company.
But sir, this is not only for the lab-grown diamond.
Sorry to interrupt you,
even for the real diamond.
Yeah, but for real diamonds, it won't really affect us because real diamonds are now 25% of our business. 75% of our current business is moved to lab-grown. So we are actually more excited and going forward, looking at growing our lab-grown business, which gives us a stronger profitability and a stronger presence with all our large customers in America.
Okay, I will come back in the queue. Thank you very much.
Thank you. The next question is from the line of Bhavya Gandhi from Dalal and Broacha Stock Broking. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on good set of numbers. Couple of questions from my end. I just wanted to understand, was there any inventory hit in Q1 or Q2? Are we expecting any inventory because of the price arrest in natural as well as lab-grown?
So, Bhavya, let me take this question. So, if you really see most of the articles that are coming out, and I'm surprised they're coming out so late, right? All these articles are of the past. So, if you currently feel that in the last 1 quarter, I don't see any inventory prices gone down. These are all old articles which are just surfacing again and, people are talking about it now. So, as on today, Goldiam does not see in the type of diamond quality, lab-grown diamond quality that we are in, we don't envisage any new inventory hit, nor have we taken any inventory hit in Q1 numbers.
Okay.
But last year, we had taken an inventory hit and we have repriced our inventory accordingly.
Okay, this is similar for our consignment sales as well, and it's true for natural diamonds also?
Yes, for both.
For both. Lab-grown
in natural diamonds, Bhavya, we are in much smaller stones. We were never in the larger stones. The inventory hit in natural diamonds, where Rappaport report reduced prices by 10 to 15% 2 or 3 weeks back, does not really affect the company because that's for larger stones, 1 carat and up for natural diamonds. For the smaller diamonds, there has been no inventory hit in natural diamonds as well. Now in lab grown, right, already the hits have happened and we are at a price where I don't believe further reductions are possible.
Okay. Is it possible to quantify what would be the 1 carat price wholesale rate for lab-grown diamonds approx?
What will be the 1 carat wholesale rate for lab-grown diamonds? Anywhere between 20,000-25,000 rupees.
Till 20,000-25,000. And at retail level?
60 margin on that.
60% gross margin?
Yes.
Okay, got it. And also with respect to...
Plus gold labor, The retail will be plus gold labor, so that will be added on also.
Okay, got it. And with respect to your corporate expenses, with respect to the new B2C business, what would be the estimate corporate expenditure for the year?
I'll have to get back to you, but currently the expenditure will be in tunes of, the people whom we've taken in, the team, as well as growing, making the development of the website and creating the stores and the store design and rents for the couple of years. But if you want the exact number, I will get back to you.
Sure. And our volume and value degrowth, the total numbers don't amount tantamount, and whether it's LGD or natural diamonds, they don't equal to the total revenue growth that we see. So, I mean, is there any numerical error? If you can just get it checked with respect to volume and value. If you add up the growth and degrowth numbers, they don't add up.
You are seeing this from the presentation?
No, I mean, yeah, you can even look at presentation as well, yeah.
So we will get back to you, but Anmol, if you have that answer on you right now, maybe you can take this.
So Bhavya, if you could share where you pulled that up from later, and we will get back with further details.
So for the quarter, we've sold closer to 19,000 of units, 19,000 units for lab-grown diamond. That is 242% increase. And our value degrowth was around 17%. So if we add that...
Sorry, could you clarify where you picked up that number from, and we will have that checked and get back to you then.
Sure. Okay, and just one thing, with respect to the EBITDA margins for lab-grown diamonds, are we seeing any margin pressure on lab-grown diamond margins? Because, I mean, in the Indian retail space also, we will see increased competition. Unlike US, where the margins are hefty, in India, I mean, the competition would be at a higher level. So will we, I mean, in the longer run, will we have to narrow down our margins in the LGD business, B2C?
So B2C, we are planning and we are setting up gross margins that are higher than our B2B business. However, of course, there will be significant operating expenses related to effectively the head office costs and the marketing and brand building expenditure. I believe that with scale, the margins should be sustainable. However, as we expand and as we create stores and create distribution, we can fine-tune our understanding of where we are sitting. Rest assured, we have benchmarked to all competition, both within the natural diamond jewelry space and the lab-grown diamond space. A few retailers who have propped up in each of these three cities. We believe that we will be higher than every natural diamond competitor at the moment, as well as simultaneously being extremely competitive with the lab-grown diamond players that have cropped up in each of these cities.
Fair enough, yeah. I mean, that helps really.
Yeah.
I'll get back in the queue. Thank you so much. Yeah.
Thanks, Bhavya.
Thank you. The next question is from the line of Pratik Kothari from Unique PMS. Please go ahead.
Yes, hi, good afternoon. So first, on the margins, if you can highlight usually how is it that we price the products between natural and lab grown? This is usually a cost plus or on a per piece basis. How are these margins derived at?
So, thank you, Mr. Kothari. So I'll take that answer. Most of our production and most of our jewelry sales are done on a sort of a cost plus model. We have a deep understanding of there are effectively three buckets of costs. One which is metal, which is primarily gold. One which is stone, which is either natural diamond or lab-grown diamond. And the third, which is labor, which again is same whether you're selling a natural diamond jewelry or a lab-grown diamond jewelry. That includes setting costs, polishing costs, as well as head office operational and service costs. So that's for our current B2B business. With lab-grown retailers, we find out more open and okay paying a slightly higher premium compared to natural diamond jewelry, especially because it's more readily available with Goldiam, and the entire style bank and design bank is available, including .com service capability.
Correct, but currently the end retailer in US is the same, right? Who's selling your natural diamonds and lab grown?
Yes, that's correct.
So why should this margins not converge at some point of time?
So we see it's already over the past 2 years come lower in terms of the lab-grown space, but we believe that at this point, given the service capability that we offer, also the back-end manufacturing of diamonds being grown in-house, which gives a little bit kicker as well, we will be able to, in the long term, sustain a higher margin profile for lab-grown diamond jewelry than natural diamond jewelry.
Correct. Okay, sure. And on the Europe and US side, again, if you can highlight, have we added any new customers or In Europe, I believe we were trying, I mean, there are no large-scale retailers, and we were trying to enter via some other route. So any highlights on this?
Yes. So Europe and Middle East, we do have some new customers, smaller scale, as you rightly mentioned. There is no large retailer as such, but we have started working with a couple of people there, couple of retailers there. And in the US side, for us, the real, crux is about increasing dollars per store. We believe we have a great distribution, and of course, we would love to build it further. But even in our existing distribution, our game plan is on how we can increase square footage and our footprint with our retail partners bigger than it is currently today. So I think a great testament to that is some of our largest retailers in the US in the past few quarters have had a sales degrowth, whereas the opposite has happened on our end at Goldiam because we were able to take up significant market share from some of our competitors.
Great. Okay. And last, on B2C again, you did mention that the acceptability in US was much quicker because those large players came in early and they adapted to this.
Retailers, yes.
Retailers, sorry. And that has not happened in India. So on your side, what would it take for you to, first, people need to be aware that this exists, and second, they need to accept. So in absence of a larger player in India, how do we tend to take this head on?
Thank you, Mr. Kothari. It's a great question. So, multi-fold answer. One, I think a certain element of scale will help because there are a lot of people still outside of Mumbai, Bangalore metro who may want lab-grown diamonds but don't have a reliable source to go buy lab-grown diamond jewelry from, right? They don't have a national trusted, organized retailer available to even go purchase this sort of jewelry from. So number one is to capture demand from those people that have a high purchase intent to begin with. Number two, to convert and to teach people that lab grown, and educate them about category in general. So, we do believe we have a certain role that we will have to play in terms of category creation, category awareness, and our marketing team will lean on initiatives both digitally and as well as in store that will help sort of educate the customer that yes, there is this new category of lab grown. It is effectively a real diamond. It is the exact same chemical, physical and optical properties. Its only difference is the origin. One comes from digging the earth hundreds, many miles, and one comes from being created via technology in a laboratory, right? So these are, a lot of education that we will have to do, and our marketing teams are well aware that this will be an important part of our role to play.
Thank you. The next question is from the line of Hiten Boricha from Sequent Investments. Please go ahead.
Hello.
Yes, sir, you're audible.
Yeah. Thanks for the opportunity, sir. I have a couple of questions. So my first question is... Hello.
Yes,
Hello.
go ahead, please.
Yeah. The question is on the cash and cash equivalent, sir. So we have a cash of around 300 crores in the book. So just wanted to understand across what instruments we have invested this cash. And apart from this, are we planning to reward anything to shareholders?
So let me take that answer. We have, majority liquid funds that are housing these part. Liquid funds and debt funds is what we have invested in. And yes, the company has a standard, we have done a board resolution a few years back that 50% of the profit of the standalone company will be distributed either as buybacks or as dividends, right, by the company. We just announced 1 rupee dividend per share at the moment and interim, and we hope to improve and increase in time to come.
Understood. And my second question is on the order book outlook about US market, sir. So what kind of sense we are getting for order book from big players like Signet, etc.? Any sense of that?
I think we are very positive that most of the designs and the hard work our design team along with our managing director has put in getting fresh and new designs and new concepts across to our customers and large retailers. So we are getting to be the supplier of choice, the production house of choice by these retailers. So we are very hopeful, and we are very confident that we will be able to